Stocks ended lower Friday after the Dow briefly topped 29,000 for the first time. The euphoria over recent record highs was perhaps deflated by data showing slower than expected U.S. jobs and wage growth in December. The U.S. Labor Department said the U.S. economy added 145,000 new jobs in December. That was below the 165,000 jobs expected by economists and less than the 266,000 job gain in the prior month. Meanwhile, the unemployment rate held near a 50-year low at 3.5%. Was today's report a precursor to what we can expect in 2020, an economy extending the current expansion at a moderate pace? Investors were also digesting the announcement by the Trump administration of more economic sanctions in Iran. This follows an attack on U.S. military facilities in Iraq that was in retaliation for the killing of a top Iranian general by U.S. forces a week ago. Personally, I'm astonished there are any more sanctions that one can come up with that haven't already been placed. Really? It's been 40 years since the Iranian hostage crisis. Maybe that's why I'm not in politics. I'm so out of touch. Meanwhile, in more politics, a Chinese delegation is expected to arrive in Washington on Monday to complete the so called Phase 1 trade deal. President Trump wants a partial trade deal signed by January 15th or shortly thereafter. All guarantee this agreement will be signed, but that'll be it. Nothing will come of it. Maybe that's why I'm not in politics. I'm so out of touch. So, let's take a look at some charts. First up is this chart here that shows the Fed just let its balance sheet shrink by the most since last May. So ponder this chart for a short while and ask the question whether a reality check is coming soon. And also consider that Apple has been up 15 of the last 16 weeks and has more than doubled in the past year. And so we're looking at the iShares Russell 2000 ETF, and the symbol is IWM, and this is the 5-year weekly chart. And again, we were near this level here, whereas in some of the other indices, we were at record levels. Looking here, though, coming from that bottom there in late 2018, we've come a ways. So a pretty decent return so far. Let's go down here and take a look at the MAC. Things don't really look all that overvalued per se, but it isn't always the level. We're at a 3.18 on the fast line. It isn't always that level there because we were at higher levels back here in 2017 and 2018. It also has to do with the amount of space covered during that period of time. And we've gone a pretty far length since late 2018, early 2019, so we may need a rest. Moving on down here into the histogram, we do have a relatively low rise on that run there. Not as high here, maybe not necessarily as high here, but that low rise run in the histogram always is a first sign of a potential melt up where things continue to march on up without any stopping. And that's really what we've been experiencing for several weeks now. Into the price rate of change, we're at a moderate level as well. 13.72 again on the fast line, just above zero. It's within reason given the levels that we've been in back here and even maybe back here. So it isn't necessarily saying that we're about to fall off a cliff or anything, but just a cautionary tale. Moving down here into the relative strength index, we're at a moderate 70.50. That's decent. And we've been up in these areas before. There, there, above, and then here, and here, and here. So again, we've been in this territory before. It's nothing new. It's just something to be cautious about because once we do enter these lofty levels, at some point, we do pay the piper and gravity does take hold. So be cautious. Into the stochastics, we're up here again. Going back, here, here, certainly in there, and there. We're not in rarefied air. We're in a cautious area. Moving down, volume looks fine. And then the Williams. We have this topping process here with this last run down here. So this is something you want to watch. If that heads below that -20 on down here to that -50, something else is in the air. And it's not rarefied. It's probably a correction or a pullback. So simply be prudent and be cautious. Back up here to the price chart for one last look. Again, I'm not saying that we're heading to a fall off the cliff. It's just that we're well above that 20 and 50 EMA. And again, what goes up must come down. Gravity is going to take hold here soon enough, at least in my opinion. Now, as you probably know, I'm always early. So keep that in mind. And for today, that's ChewDog Charts. Thank you.